Ladies and gentlemen, good day and welcome to Harsha Engineers International Q4 FY'24 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Vishal Rangwala, CEO of the company. Thank you, and over to you, sir.
Hi, thank you, Jacob. And hello all. Welcome to our quarter 4 FY'24 investor call. As per past practice, while our CFO, Mr. Maulik Jasani, will take you through numbers in greater detail, I presume that you would have had a chance to go through them already. And I'll talk through some of those general trends. At the outset, I feel elated in reporting a much stronger quarter 4 FY'24 numbers, both at India level as well as global level. I'm also quite happy to report that quarter 4 FY'24, the actual results have turned out to be significant improvement. If we talk through India engineering business, talking specifically about our growth drivers, I'm starting with bushing segment, where we have started seeing a good traction, though a bit late in last financial year, which reflected by a healthy inflow of orders, thereby improving our visibility in financial year 25. Thus, while we have closed the year with a sales of around 40 crore in the segment of bushing, we expect this business to grow significantly, probably nearly double, and expect to achieve sales of at least 75 crore plus in FY'25. This is specifically for bushing segment. We continue to work further in this segment and win additional development and opportunities as well. Similarly, I'm happy to report that we have started seeing improved order flow from plants that have been set up by our key customers in India, which cater to their global requirements. This validates that we are the natural beneficiary of China Plus One strategy implemented by our main customers. And no doubt we continue to have a dominant share in Indian market, and we become a key beneficiary of all the increasing requirement from our customer. If we talk about our business from Japan-based customer, though this has been a lower than our expectation in current or previous financial year 24, we expect this business to grow significantly in coming years. Further, though I cannot share specific detail, I can only say that we continue to work aggressively on a various exciting major outsourcing project of our key customers in various parts of the world, including Europe, Japan, and USA. Lastly, while our LSB business has not really grown the way we expected in the current year, which is largely due to subdued global demand undercurrent both in wind as well as industrial segment, we believe that this should start gaining traction in financial year 25. I'm also happy to inform that we have witnessed a strong growth in stamping segment, particularly on the railway and the automotive side. Thus, we saw sales jump to around 50 crore for stamping in FY'24, and we again expect at least a 50% growth in business in the segment for FY'25. Our greenfield project in India is on track. While a major capex is on the site development as well as basic infrastructure, including utilities, as we have indicated earlier. In the first phase, we are creating additional capacity for bushing as well as large size bearing cages. And we are targeting that this should become operational by Q4 financial year 25. I'm happy and relieved to also report that China has already come in positive profit territory in Q4 financial year 24, indicating a revival in demand from our key customers in China. And I'm cautiously optimistic that this trend to continue through financial year 2025. However, I must say that Romania is continuing to face the headwinds in the form of no near-term revival sign either on the wind side or on the industrial side in Europe. However, we are currently working on the strategy of significantly improving the product mix by increasing the share of cages in Romania from current level of 15% to more than 30% in FY'25. And based on this strategy, we expect Romania to at least reach cash break-even in FY'25. Lastly, as you can see, our solar vertical has reported a decent growth in top line, and there is an improvement in bottom line also. This is largely on account of renewed interest in renewables in the wake of positive renewable policy in the state level. While strategically we do not propose to allocate any significant additional capital to this segment, we expect the same to continue growing at a very positive rate. And also we see that it will contribute to a bottom line. Our targeted top line growth for financial year 25 on a consolidated basis is around 10 to 15%, but our bottom line growth expectation for financial year 25 is in excess of 25% over financial year 24. Thus, I feel confident that financial year 25 will be much better year as compared to 24. I sincerely thank all of our investors for continuing to repose their trust and confidence in Harsha, and I wish all of you a pleasant evening. Thank you, and over to Maulik to walk us through numbers for Q4 24.
Thank you, Vishal, for the overall business review. Hello, everyone. On a consolidated basis, in Q4 FY'24 reflects an all-round improvement in the top line as well as the EBITDA and PAT margins compared to the last quarter. For the quarter ended March 24, for engineering business at a consolidated level, we have achieved top line of rupees 321 crores against rupees 278 crore in the immediate previous quarter and against rupees 325 crores in the same quarter last year. We have achieved consolidated EBITDA for engineering business at 60.6 crore in Q4 against 48.5 crore in the last quarter and 56.5 crore in the last year, same quarter. Continuing focus on cost, improving sales as well as favorable pass-through situation for raw material prices and better product mix has resulted into improved EBITDA margin at standalone as well as consolidated level in the last quarter. For the financial year ended 23-24, the company has achieved a consolidated revenue of rupees 1,227 crore in engineering segment against 1,299 crore last year, and annual EBITDA is achieved at rupees 198 crore at 16.2% of the revenue against 218 crore last year at 16.8% of the revenue for engineering segment. In solar business, we have achieved revenue of 165 crore and EBITDA of 1.8 crore for the year 23-24 after adjusting 0.67 crore loss of the USA company and one-off cost incurred in the Q1 as we discussed in the previous call. Overall working capital cycle at consolidated level is around 141 days at the year end against 144 days in the previous year end. The company has incurred a capex of rupees 25 crore in the last quarter, which includes the capex out of the IPO money of rupees 11.5 crore. With this brief number on the financial side, I hand it over to the operator to take over the Q&A from the investors. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsha Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity and congratulations on a good set of numbers. So my first question is, what kind of improvement do you envisage in FY'25, especially on the exports front? Because we have seen global bearing companies reporting muted sales in Europe, and the outlook shared by them is also not very encouraging. So how do you see our exports panning out? So I am not talking about your sales from Romania and China, from those facilities, but what you produce in India and sell to the outside.
Harshit, we expect our export to continue to grow. However, we have also received a muted, demand expectation and forecast from our customers. So we expect a moderate growth on that front. Is the current projection. Now it may change based on various segment how things turn out. But that's right now we are also expecting moderate growth, not a significant growth from that segment. However, we are also continuing to work on some outsourcing opportunity, which might be a add-on business, and which may add to that growth number.
Just
to add, I think broadly they remain, Harshit, they remain in the range of around 50% broadly, exports out of India, and that is more or less comparable with the previous year also.
Sure. So, in percentage terms, how our exports would have grown or degrown in FY'24?
So, Harshit, you can see that it is there in our IR presentation, and our exports from India is 49.3% in FY'24 against 51.6% in the previous year for engineering business.
Understood.
We are different.
Sir, secondly, the wind equipment demand in China seems to be in a bad shape. And since we supply the bushings to the companies who are exporting out of India, I mean, what gives you confidence that we will be able to grow more than 50% in FY'25?
So, 2-3 changes within that. One, our customers' focus is not to export to China, but it's outside China, Europe, US, and other territories. Second, the demand increase is driven by, we were talking about earlier that how this bushing adoption is taking place. So more and more gearbox going in with bushings, and that is what is giving us the confidence, and this is supported by the projections by our customer. So that is the reason we are confident of a significant growth in FY'25 for bushing segment, in spite of overall wind demand may be muted. We see that India demand in wind is still strong, and our customers are moving from a normal gearbox or without bushing gearbox to a bushing gearbox, and that is what is driving the growth for us.
Just to add, there's a little bit of base effect also. See, here we have done 40, this year, which we should have done a little more, and now it is shifting. So, next year is the normal, which we would have or wanted to do this year. So that way also, it is, yes, it looks very sharp, but this is how you have to actually look at it.
Understood, sir. Very well. Thank you very much for answering my questions. I'll come back in the question queue.
Thank you.
Thank you. The next question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, sir. Congrats for the decent set of numbers. Am I audible?
Yes,
Yes, very much.
Yeah. So first question on Romania, you said we still continue to face headwinds and the revival is low, and we're going to increase cages from 15% to 30%. So if you could throw some more light on, are we shifting some production there, or is it the increased demand? How significant that in terms of revival of Romania? I understand we were doing largely castings, and what is the utilization level currently? We did talk about energy cost there. What is the status there? Other things, getting better from that aspect, or is it that there's no demand for from there which we are not able to meet as per plans, that is still impacting?
Yeah. So, Amit, we are seeing overall a muted demand in Europe, and that is one main challenge. On top of that, our semi-finished portion is significant, is another challenge there. Now, what we talked about, increasing cage share from 15% to 30%. We are seeing some traction in terms of more and more customer wanting to buy out of our Romania facility, and there are discussions about additional outsourcing by our customer. So combination of that, we are expecting to grow the cage supplies out of Romania facility this year, and based on that additional conversion of cage, which is a higher value added product, we are expecting that we will come very close to break even or better in Romania. That's the thinking, and actually there is some back-end support from our customer in terms of award in that direction. So we are continuing to win some additional orders in Romania to support this direction. So fairly confident that we will be able to change or shift the portfolio based on what's going on right now. However, headwind still remains. Overall muted demand in industrial and wind market, which is a large size, is our biggest segment when it comes to cages there. So that challenge still remains.
Right, sir. Second thing on the penetration with Japanese customers. So just wanted to understand how much was the contribution this full year, and did we made any progress? What is the outlook?
So we grew. I believe, if I remember top of my head, about 10%. Yeah, 10% plus last year, and that was expected to be higher. And some of our projects which were in pipeline, it got delayed in terms of realization. They are back on track, and we are expecting that growth to come in this year. We are seeing already, higher flow or a forecast from our customer on that front. So fairly confident of that happening. We are expecting again Japan-based customer, and when I say Japan, base customer, not necessarily a export to Japan, but supply to Japanese companies to grow significantly in the tune of 20 to 30%. That is what we are roughly projecting at this time for FY'25.
Right. So how much was the percentage contribution from Japanese?
Percentage contribution in terms of total revenue?
Revenue. Yeah.
I think we'll have to check.
Sure, sir.
Yeah, but we'll come back to it. Yeah.
Yeah, no worries. So for wind bushing, sir, just wanted to understand, you said 40 crores and now we are expecting 60 crores in FY'25. So just wanted to understand, there's a lot of talk about, you're talking about muted market outside, but there's a lot of talk about, wind additions in India. And so how's the outlook in Indian market? And second thing, are we the only vendor supplying to, global MNC gearbox manufacturer, or is there a competition within India or outside where we are, competing? So just more color on the bushings market.
Yeah. So on the bushing side, I want to first clarify the numbers. We are expecting to grow almost to the tune of near to 100%. So maybe we are going from 40 crore to about 75 crore plus is our expectation today. This is, as I mentioned, that this is from a competition point of view. I'm not right now aware of any competition in India. Yes, there are suppliers who supply this product outside India. One, that's exactly the reason. One, they are taking us as a bigger and bigger substitution supplier, meaning what they were importing earlier, now they are moving to 100% supply by Harsha. That's one move. Second move I've talked about is how they are making X number of gearboxes. Not all gearboxes were using this bushings. Now, as a percentage, higher number of gearboxes are using this bushings, or maybe they are selling higher number of gearboxes with bushing integrated into it, and thereby the market is growing for Harsha. In India specifically. Our customers, as I mentioned, are primarily supplying into Indian market as well as globally other than China. And overall market outlook may be somewhat muted. India looks good, and primary this growth is coming not out of the wind market growth, but out of a conversion to bushing is what is happening.
So you mean to say largely good part is coming from conversion than the new addition? Is it right understanding?
Correct.
Sure.
Or rather, any incremental requirement getting shifted to bushings. That's what it is. We are not replacing the existing gearboxes per se. This is what our perception is, but incrementally more and more the new requirements are moving towards bushing in gearboxes.
Right, sir. Thank you and all the best, sir.
Thank you. The next question is from the line of Naisar Parikh from Native Capital. Please go ahead.
Yeah, hi. Thanks for taking the question. First one is, could you, you mentioned in terms of the outlook for next year, can you just talk about what are the drivers of profits growing faster than revenue, and what pockets will we see the margin expansion?
Okay. So if you see this year, at our international subsidies level, there is a negative contribution to the extent of 14-15 crores, correct? So one, as we already explained, China has turned positive. B, our strategy is to ensure that somehow At least in Romania, if it doesn't contribute more on the positive side, at least it should stop losses. So that could be therefore an incremental direct addition to the bottom line. That is why, assuming that India continuing to grow maybe at a higher double digit, and Romania, China not growing that aggressively but maintaining more or less a muted growth. So overall top line would grow 12 to 15%. Bottom line is bound to grow higher because of these typical change in the composition at the console level, with India continuing to contribute same in more or less in the same percentage range of 20-21% EBITDA.
So India margin you're not expecting to increase significantly. It is international which will drive the profit growth.
India remaining constant or slight improvement. International, India will improve actually a little bit, definitely.
Because of product mix.
Yeah, product mix change. But international stopping negative contribution and chipping in with little bit of positive.
Okay, got it. And can you just to be clear, this year, I think if I just based on the numbers you mentioned, on a console level, India business would be around, the domestic business would be around 33% and 2/3 is rest of India, right, including international and exports. Is that fair?
So India, can you just repeat your point?
At console level, India is 33%.
India to India, you are saying?
Yeah.
Am I right?
Within India.
Yeah. That is right.
So, yeah, that is right.
Yeah. Exact, not exact.
International, can you just give a broad split between geographies?
On a macro level, about 25 to 30% is Europe, and about 12% is Americas, another 10-15% is China, and rest is rest of the world kind of.
Okay, understood. And in Europe, right, which segment is our biggest? Because you mentioned Europe, there is slowdown, and we are seeing it across industries. So, which are your top segments in Europe that you catering to, and how should we look at that for the next year?
So, from our portfolio, we cater to a cross-complete segment, which includes wind to industrial to railway to automotive and everything in between. And we are seeing a very muted growth projection on the industrial side, including wind. And maybe a little bit of better relatively improvement on the automotive side is what we are seeing. Again, nothing to say that it's full recovery, but some improvement is what we are seeing on the automotive side. That's how our order book is looking like. Beyond that, I mean, I don't have a very specific segment-wise thing, because right now our customer also don't precisely tell us exactly what goes into what segment.
Got it. And if I can squeeze in one last question, what is your order book at the end of the year and order intake for Q4, sorry?
See, we don't really work on a long-term order book. We are basically supply to we get a forecast, and that's what I tend to talk about, kind of a rolling forecast from our customer. So that becomes our indication for projection. So we don't really talk about our order book as such, because that's how the industry works in this segment.
So just to elaborate, we have all long-term, very long-term contracts with almost all customers, and then we get rolling annual forecasts, and then they keep on sending POs as they need. So that is why if I annualize, then frankly my order book is almost for the full year. But then in reality, the POs would be maybe on a monthly basis or something like that.
Got it. Makes sense. Thank you so much. Thank you, and all the best.
Yeah.
Thank you. The next question is from the line of Aditya Shah from Vikram Advisory Services Private Limited. Please go ahead.
Sir, I have a question regarding our capital allocation policy. So within that, what are our CapEx plans for the next 2 years? And any reason for conserving so much cash?
Yeah. So Aditya, as we have discussed, our overall CapEx plan is in next 3 years is around 300 crore, including the new greenfield site, which is still under the construction phase. And as you have observed, the major cash conservation is on account of our IPO money, and which has been kept for the further growth investment only. And once we have a new site in place, we will have a major plant and machinery CapEx in the phase manner will continue. So just to answer your point, it is around 300 crore plus in next 2 to 3 years, and we are also exploring if any right opportunities. We evaluate the various market opportunities available in our segment.
Right. So 300 crores if your is your CapEx, and any idea on what is the ROE that as a company we are targeting for the next 3 years? Because currently our ROE is pretty low at 10%.
Yeah, mainly as you rightly observe, it is on account of the cash reserves left, means cash allocations available with us, cash flow available with us, and it is actually pulling down. And once this everything will be deployed, maybe it will take another 2 years to reach to the peak. And maybe down the line 4 years, our expectation is to generate the similar ROE pre-IPO time is around 17-18%. After 4 to 5 years, it will gradually increase your ROE.
Okay. So next 5 years, our internal target is around 17-18%. So probably till 5 years, we would expect ourselves to be between 10 and 12%. Am I right? Because
no. It will gradually go up, and we expect that in next year the pace of capex and all other investment plans would accelerate. So I would say next 3 years we should reach 17-18%.
Oh, that's nice. Okay, that's helpful. Thank you. And sorry, last question is about any dividend policy as a company. Do we have or no?
Yeah, we do have it, and it is already there in place.
All right.
And we are following that.
All right. Okay. Thank you.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Yes, sir. Thanks for taking my question. So my first question was, I understand that you said, your customers were not telling you where your bearing cages are being employed. But sir, of course, when you talk about India from a macroeconomic perspective, there is a lot of talk on how the industrial side is picking up. Capex plans are very, very big for the next 3 to 5 years. Of course, with a stable government if elected, So just wanted to know from your perspective, you did say that there is some recovery in automotive side. But I believe when you look at bearings, industrial side also, it will contribute very, very handsomely and meaningfully. And you basically supplying component or a bearing cage to that industry, you will definitely benefit out of it. So sir, just wanted to know what's your view on the industrial side from a long-term perspective?
Yeah. So, again, we are from a long-term perspective on the industrial side, we are very bullish. Rightly, as you mentioned, we see a significant capex investment in India. And, since we are supplier in that segment, we should benefit. We continue to see growth in India, and which includes industrial as well as automotive for the last year, and then we are continuing to see that growth. More than 10-12% growth we are seeing in India, combination of industrial and automotive. And my comment related to industrial still muted, but automotive improving, was reference to European demand or a global demand, which we cater out of India as well as various locations.
Sure, sir. And sir, just in terms of bushings, if I got the numbers correctly, you said you sold 40 crore worth of bushings in FY'24, and 70 to 75 crore you are basically planning in FY'25. Is that right?
Yeah. Yes.
Yeah. So, but sir, just again from a perspective, just wanted to ask you, this bushings go into this windmill gearboxes, and they are seeing some muted growth. As you said, Europe also is muted on that front. So, sir, how will we achieve almost a double kind of growth? Just wanted some more color on that.
I think I'll just elaborate on what I answered. I think what is happening is conversion of gearbox without bushing to with bushing.
Okay.
So basically, if my customer is selling 100 gearboxes, maybe they were selling 20 or 30 with bushings, and thereby my demand was based on that 30 they were supplying. Now they are converting more models, more bigger portion of their supply to bushings. So basically, instead of 30, 60 gearboxes out of the total 100 they supply are going with bushings, and that's what is increasing the demand for bushings. As Sanjay bhai, mentioned, we have talked about this in the past, that when we won the order, it was about, with both two customers we had 120 crore plus order opportunity which we had won, which was supposed to mature in 25-26 and or 24-25 rather, and we are running 1 year delay on that. So basically, what was supposed to happen 23-24 is now realizing in 24-25 is what we are saying. In spite of overall global market still muted, India still doing decent. That it's the conversion of more gearbox with bushing is what is driving this growth, which we were expecting when we started supplying to these set of customers.
Okay. But this growth basically is coming from Europe only, or this 75 crore? Basically, this growth comes from Europe only, right? When you're talking about double, or is there some growth from India as well in this?
No. So for us, the supplies happen out of India. Our customer majority we are supplying to customers who are located in India.
Okay.
Our customers supply to Indian market the gearboxes. They also supply to European market and other markets. We don't have an accurate number of exactly where the gearboxes are going.
But yes, that includes India also.
Correct.
Yes.
Okay. Sure. But you do expect good numbers from this segment. Okay. Sure, sir. Sir, and just, when you go back, when you look at your subsidiary performance, and then just, if you just deduct the Concall minus standalone. Now, when I look at this, of course, you've plugged in the losses. Losses have come down from the subsidiaries. And when I look at the EBITDA margin, it's around break-even, 0.3% for FY'24. Okay. Now, just, sir, of course, it's a combination of Romania and China. Those are your main subsidiaries overseas. So, sir, going ahead, how do you look at the EBITDA margin for both these subsidiaries going ahead? Just some color on that.
Yeah. So, as we were, I don't have an exact number in front of me. From where exactly it's going to go from a percentage point of view. What we are sharing that definitely it has turned positive for China, and Romania in terms of losses have also reduced. And ultimately, we expect the EBITDA margins to turn significantly positive and expecting positive PBT, PAT from China, and roughly break even from Romania. That's the transition we are working on.
That's for the current year. Yeah, just to add, the targeted blended EBITDA at China level would be in the range of around 12 to 13%. And in Romania, in a good year, normal year, it should be around 6 to 8%.
Next year.
Not 24, 25, okay?
Right. This is the blended EBITDA, what you expect in a good year, right? For Romania.
Hopefully in 25, 26. Yeah. But it's too early to comment about that.
Yeah, sure, sir. I understand that. No, my question was from on an FY'24 basis, it's 0.3. Just talking only about the subsidies. So just wanted to know how you see it going ahead. Okay. Sure, sir. And so just finally, what I wanted to ask you is, when you look at, of course, your 30 to 40% businesses coming out of India, so that is, and 40%, 35-40% is domestic, coming in from India. Just wanted to know from your side, which pockets do you see, like, for example, say it could be railways, it could be auto, of course, auto you have mentioned, railways, which pockets do you see good growth in terms of domestic and exports, both, if I could ask you?
Sure. So, for FY'25, basically we are domestic side, we are seeing a positive growth across. Little less on the industrial side of the things, because partly because our customers also export to other market. But overall, we are seeing growth on the projecting growth or expecting growth from a railway segment. We are seeing growth on the automotive side, as well as projecting growth on the industrial side. Little muted versus relatively other segment on the industrial side. That's what we are seeing for India. Globally, as I mentioned, most of the growth projections are somewhat moderate. Definitely there is a growth we are expecting over FY'24, specifically because it was a significantly down year. When we see a down year, usually our customers also tend to conserve inventory, and they take some action to reduce inventory, which sees a little bit bigger degrowth sometimes for us. And in a somewhat of a growth year, that trend reverses. So in general, we are expecting that this from an international customer point of view, we should see, for an established business, we should see a moderate growth and not a significant growth. And then we continue to work on additional business opportunity with various customers, so which would include some of the outsourcing projects, as well as some resourcing projects. So combination of that, we still see internationally for us, Harsha, growing about 8 to 10%. It's my rough average overall, and then India would grow more than 10-12%, and then the difference will be kicked in through the products what I've talked about, bushings and stamping and all that.
Sure. And so lastly, just wanted to ask you, it's commendable that 24, I'm just seeing your standalone results. So margins in engineering, your core engineering segment, you have managed to, keep it at 21.7 or 22% odd levels, which is very commendable. So do you think this should be a sustainable margin going ahead? 21 to 22% for engineering I'm talking about?
Yeah. Yes. I think so, definitely.
Sure. That's all from my side, sir. Thank you so much for answering my questions.
Thank you, Jaideep.
Thank you. The next question is from the line of Divyam Gupta from Gupta Family Office. Please go ahead.
Hello.
Yes, sir, you may
Hi.
proceed.
Yeah, hi, Divya.
Yeah, hi. I appreciate the opportunity, sir. I just have one question regarding our solar EPC business. I know it's a really small part of our overall business, but when I look at our margins, we make early single-digit EBITDA margins, but other players in this segment, they make mid-teens margins. So why are our margins so low in this segment? Thank you, sir.
Couple of things within this. There is certain legacy to this business, which has certain costs attached to that, which is driving the margins on a slightly lower side. Also, I think we are also not to scale in terms of the opportunity. Higher we scale, we could get a much healthier, better margin in this. And again, we are also not very aggressive on scaling because with that comes in additional capital allocation and other things. So we are somewhat conservative on our approach. And the third big element is that there are couple of one-offs which we had faced. So if I talk about fourth quarter or last quarter, basically we took a 67 lakh loss on account of US subsidiary which was created a few years back, and we had decided to wind that up, close it. So that's the one-off. Another one-off we shared, I believe, first quarter or a second quarter, I don't remember exactly, of FY'24, where we had to incur a significant expense on one of the O&M contract where O&M payout is still yet to happen. So all those combination of the 2-3 factors I mentioned, the margins are somewhat muted versus if you compare. However, we think that there is still a continued opportunity within that segment, and we want to play the right scale role and not be over aggressive. Otherwise, what we have seen in the past, that it can create a receivable and other issues. So we are trying to avoid that.
Great, sir. Thank you so much, and wish you all the best for FY'25.
Thank you, Divya.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir. Just to take the conversation forward. So what is our roadmap in terms of the solar EPC segment, and what kind of order book do we have, and the execution period?
So our current, as I was mentioning, that our current strategy is to focus on industrial, rooftop, or ground mounted. And right now we are not, we are limiting our focus to the Gujarat state and not venturing out on significant projects beyond that. And we see that there is a healthy margin we can make with that because of the favorable opportunity.
I think we should continue doing this in the region of 150-200 odd crores. See what has happened. Currently, the government policy is very favorable. So we see a lot of traction even in this limited sphere where we want to operate. And I think about 150-200 odd crore as a run rate now, with the same level of capital allocation, with maybe mid single digit margin is what should happen.
Sir, I think so this rooftop part of the opportunity for 1 crore homes getting rooftop solar being installed. So does that also provide a good runway for companies like us to get a share of what maybe in the annual going ahead?
Yeah, you're right. But as Vishal explained, see what is happening as an engineering focused company, our entire focus capital allocation is on the opportunities where we are working. Solar happens just like that. Okay. And we don't want to allocate more capital. So we will be content with whatever little positive contribution this business gives. It goes sort of in an auto mode without too much of a management bandwidth being really focused on that as a growth. This is where we are, honestly.
Right. So just to harpen on slightly more, then what are the synergies of we doing this as a business when we are not providing the right management bandwidth?
No.
We are not getting the requisite.
So Saket, I'll explain. See, maybe you haven't caught us up earlier. So this is more like a legacy business. This business was handled by Vishal's younger brother, and then unfortunately we lost him, and then it's just merged into our business sort of to give us support and continuity to ensure that there is no sudden disruption, and that's about it. So really it was not a synergistic move, but more of a action that we took at the family level, and now it just continues as a small division. That's all. Nothing more to be read into it.
No.
Okay. Sir, and also this bushing part of the story, sir, what led to exactly this bushing into the gearboxes, and what's the outlook going ahead, that for going ahead, the new boxes for the turbine which will be done, it will come with a bushing? Does there any regulatory change? What has led to this demand?
Yeah. So bushing, the bushing is an extension of our current competency when it comes to machined non-ferrous castings and high precision machine capability. So that's what what got us in there. Specifically on the bushing adoption in the wind industry, what we understand is happening is that our customers gearbox designers are basically trying to reduce the weight to power ratio, basically shrinking the design size of the gearbox for the same power transmission. And one of the strategy to achieve that they have adopted is replacing some of the bearings with the bushings. These bushings are of high precision cylinders under which the shaft rotates, and basically through adoption of bushes they are able to shrink the design. Space taken by bushing versus bearing would be significantly different, and so this requirement by wind customers of reducing the weight and possibly also the cost overall of a gearbox for the set power transmission is driving the conversion from a non-bushing gearbox to a bush design gearbox.
So just to add, we got this lead from our Romanian subsidiary 3-4 years ago. We found it very interesting. We developed it. We are very good at precision. Anything to do with precision is our core competence, and that is how we sort of branched out into this related diversification. And now it's panning out to be a very good branching out, because there's a lot of synergy with what we already do.
So just to conclude, it is on the efficiency part, and then there will be an incremental demand since it will lead to lower operating costs for the windmill. This understanding is correct?
Yeah, we believe that. Efficiency not necessarily on the operation of the bushings, but overall windmill efficiency, gearbox efficiency in terms of weight and other things, yes.
And sir, what is our capacity for the bushing segment as a whole? We did 40 crore annual number for FY'24, and you are looking for 70-75 crore for the next financial year.
Correct. Our capacity, as I mentioned, that we had installed capacity with order book, a potential order book of 100 to 120 crore orders in mind. So we have installed capacity for that. And further, we are working with our customer to take care of next set of transitioning with this bushing kind of design for gearbox. In terms of overall market opportunity, see, this is as I mentioned, we talked about, this is a transition where they are moving from one design to another, and this will take time. And we ourselves started this, in 2019 when we started making prototype, and it was approved in 22 or end of 21 kind of thing. So ultimately, what we expect that when the full transition happens to the bushing, this could be a 5,000 to 5,000 plus crore market opportunity globally, and we are a very early entrant to this, probably first one in India, and we are trying to tap into this opportunity. That's what is going.
Yeah, and our targeted market share is about 10%, so about 500 crores at the peak. This is what.
Okay, but this is one-time business only, sir. 500 crore, if you will target at its peak, will be one-time business.
No, this is regular. So, the wind market will keep on growing, new gearboxes, and currently we are not even looking at any replacements. We're just looking at the new incremental capex and the gearboxes that are required for that.
So it's a recurring.
Recurring.
Sir. Okay, sir. Sorry, thank you for correcting me. So currently we have a maximum of 120 crore annual capacity, and we have current.
What Vishal said, that at the current capacity I can do 120. As a part of my greenfield, I am adding another further capacities for bushing. We'll keep on adding as we grow. It's a modular approach.
Okay. On last question on the greenfield part and the employee cost also, sir. What steps are we taking for rationalization of firstly the employee cost, or our business is structured in this way? I think so more than 10% is our employee cost, employee benefit expenses. And on the greenfield project, sir, if you could give us some more color, what would be the size of it, product profile also. And we have mentioned in our presentation that the greenfield project is satisfactory and is expected to commission in FY'25. I think so for this financial year, 24-25, we'll commission it.
Yeah. Yes.
Right. So what we are, as we have talked earlier, that we are expecting to invest about 300 odd crore in the greenfield side over next 2+ years. There we are expanding our existing product, basically our large size cage product portfolio. We are expanding. We are doing some expansion of industrial bearings, as well as some bushings is what we have planned so far, and we are also going through significant growth on the stamping component side. So that's what is getting expanded on the third side, which is under construction. As we talk, will be commissioned in fourth quarter, and then we will continue to invest, and that it will take couple of years before it can really
in a phased manner. Yes.
So it suggested it will take some time before we can actually have a significant volume out of it, but these are very long-term investment. Currently, major investment going on in the building and land and other infrastructure, which will be used as a foundation for the next phase of growth.
On the employee.
On the employee cost, yeah.
नहीं सर, इसमें एसेट टर्नओवर रेशियो फिर क्या रहेगा जब आप अभी बता नहीं, मैंने आप बोल रहे कि फेज मैनर में बिल्ट होगा बिजनेस.
So our industry, we estimate asset turn to be 2, but in a day one we cannot achieve 2 because the bigger chunk or the initial chunk of investment is going into infrastructure, which will be used as a foundation for lot of other investment and so on. So initially it may be lower, but this is our benchmark. We average about 2 on the investment to
turnover.
Yeah.
Yeah. And just to touch upon Saket, your point on the employee cost, it is around 10% at a standalone level. Reason mainly is we have a high mix of skilled and unskilled labor, considering that we are into the precision engineering, and we need quite a good qualified engineers teams deployed on the various activities, including the new product development activities and production activities. So this is the average yield, and where we are focusing as of now is to improve the productivities as a hourly output, and also to work on the various automations which we already deployed in various lines, and we continue to deploy in other lines in the automation mode so that we can reduce on the labor cost.
Sir, last point, sir, if a suggestion from my side, correct me there also. In our presentation, the number of plants we have and the product profile, I am unable to find any slide there. So correct me if I'm missing something.
So if you can refer to our previous investor relationship slide, we have a company overview in our quarterly presentations. In the latest presentation, we have just removed the company overview slides, considering that now it has been published almost now.
So we have 2 major plants in India near Ahmedabad, one in Romania, one in China, and the third greenfield site is coming up again just adjacent to our Ahmedabad plant facility. So there's total 5 plants once the greenfield becomes operational.
Yeah, and details are there in the previous.
Sir, we should continue with that. We are still a very new company in the listed space, so a lot of investors' interest would be there to understand and you are doing capex also. So if you could add the same and provide us with an input of what actually being specialization in the different facilities, that would suffice a lot of queries. Hardly a page or 2 in your presentation would serve them.
No, doesn't matter. Point taken. No problem.
Noted.
Yeah. Dhanyavad, sir, for all the response and all the best.
Thank you.
Thank you. The next question is from the line of Shriyum Kapoor from PL Capital. Please go ahead.
Hi, thank you for the opportunity and congrats on a good set of numbers. I just had a few bookkeeping questions. If you could help us with the revenue numbers for Romania and China individually for FY'24.
Yeah, so you need the China has done the revenue for the full year of FY'24 is around 93 crore, and Romania is around 224 crore.
Okay, thank you. And if you could also share what the capacity utilization has been in your, for Romania, both in your castings as well as the large size cages, because, and whether there's been any kind of capacity expansion outside India in the last year or so, are there any plans for that going forward?
So on the casting front, Romania has a lot of capacities, and it's very nominal utilization as of now, considering they have a huge foundry capacity, maybe in the range of 20 to 25%. I don't have handy numbers. While on the cage front, the utilization is around 40% plus in Romania, and China is around 50%, or 60% around
on the cage,
in China cages.
And this is for the current quarter, recent
numbers, yeah.
Okay, I see. And thanks. And just last question, if you could also share, so I believe you mentioned that Japanese contribution, I might have missed that. What the share of Japanese revenue would be? You had mentioned earlier that you would get back to us. Do you have the number handy, or will we have to take that maybe offline?
Yeah. So Japanese, the last year sales is around 65 crore.
Yeah. In fact, this was also 65. One of the earlier questions, so we just got the data.
Yeah.
It's 65.
Yeah, it was from PL.
Right. Yeah. I was just following up on that. So 65 crores in FY'24.
Yeah.
And you expect this to grow maybe about 20 or 30% in FY'25, correct?
Correct. Yes. Right. There was some muted growth, but yes, it will improve this year.
Sure. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pankaj Motwani from Equirus Wealth. Please go ahead.
Thank you for the opportunity. A follow-up question on bushing growth. So just I want to understand, the bushing growth is due to the conversions of switchgears, or there could be some increase in volume of switchgears too?
Can you repeat your question?
Yeah, we didn't understand. Can you repeat, Pankaj?
So I want to understand that you explained that bushing growth is due to the conversion of switchgears. So there could be some also reason like increase in volume of switchgears, or?
No, I think maybe we did, probably I said something which created this confusion. The growth is because more gearboxes are going with bushings versus earlier.
Earlier bearings.
Earlier it was supplied with bearings, and only some of those bearings are now replaced with bushings. And the bushing, the gearbox with bushing included in it, as a percentage is rising in our customers' supply, and which is driving the growth of the bushing.
Okay. And so,
is that
so where? Yeah, that I understand. And where these conversions are happening, like these are happening in India or over the global?
Currently, our majority supply is in India to our customers in India. Some quantity, minor quantity, goes outside India. However, we understand that our customers are sending these gearboxes, is supplying in India as well as supplying outside India.
Okay. And what are the margins in our bushing segment?
They are comparable at India level. Around 20-21% EBITDA.
Okay. And just a single bookkeeping question. So if you look at our solar EPC EBITDA and PAT, so that are slightly different in our standalone and console business. So I believe that solar EPC business is in our standalone books only. So what is the reason behind the difference?
So Pankaj, as we mentioned during the call, there is a 67 lakh rupees of loss in standalone books on account of USA subsidiary closed down.
Right off, yeah.
And that was a solar subsidiary. And hence, in a console, it has been eliminated because loss was booked in previous years in console.
Got it.
And hence there is a gap.
Got it. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor and from Kapoor and Company. Thank you. You may proceed now.
Hello. Hello. Yes, sir. Sir, can you provide me? Yeah. Sir, can you provide me the mix of sales between our bearing cages and bushes in the split up of the same? What are the key components, sir, of the sales mix in percentage terms?
Bushings numbers we have already given you. We have given you the stamping numbers. So rest are the cages and semi-finished products in Romania and the byproducts, scrap cells. And we don't give that breakup.
Sorry, sir.
Saket, we don't give that breakup so far.
Okay, sir. No breakup. And sir, lastly, sir, have we had any IR for our company, or is it in-house?
So it is
Yeah, it is
in-house,
in-house.
and Sanjay Bhai is also on the call, support us in all the IR activity.
Okay, sir. So we should ideally look for engaging an IR firm, because of the story of the company and also going ahead, the type of capex the country is witnessing, and how well the story can be gelled along with the capex which is in the annual of completion and then taking pace. The investor needs to be abreast about the activities, and that should be improved. That should be given with an improved quality of our investor presentation also. So I request the board to take on note of engaging with an IR firm. There are various people associated in the country which can provide superior services for the investing community. So kindly consider.
Sure. Point taken.
Please take note of it. And sir, lastly, sir, on the AGM part also, we find it that today in the month of May, we have announced our numbers and we are done with it, and we are coming up with an AGM in the month of September. So what led to this 6 months preparation or 4 months preparation to hold an AGM, that too also on an OVM platform? And again, the dividend also of 1 rupee, although you have mentioned about the policy and all, but still that payout will happen also in the month of September. So just wanted to understand that thought process, if that could be taken on the call, or if you want to one-on-one also, I can understand that. But a 4-month gap could not. Yeah.
One important thing is we have started, Saket, giving integrated reporting, and which requires some more efforts on finalizing the overall integrated reporting activities with our consultant and advisor. And we are not able to share the numbers with them in advance till the time we did the board meeting and put it in the public domain. And hence, this is some incremental time for that additional activities in the AR for integrated activity. We have noted your time, and we are focused on reducing the timelines. As you can see that our board meeting is in the 16th May and not in the last week of the May.
Correct, sir. We hope for better interaction and more understanding of the company. And are you looking to meet investors also, sir? The investors can come down and meet also?
Yeah, you can connect us, and we can plan it up.
We meet regularly. There's no problem. We attend conferences. We attend calls.
Fine.
We are always available for all interactions. Not a problem. Okay?
Okay, sir. Thank you, sir. And all the best.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Vishal Rangwala, CEO of the company, for closing comments.
Great. Thank you, everyone, for patiently attending this call and listening to our commentary and inputs. We hope you have received all the relevant information, and as Sanjay Bhai mentioned, you can reach to us and we can support if there is further gap we need to fill in. With that, really appreciate your time and thank you very much, and have a good evening.
Thank you.
Thank you. On behalf of Harsha Engineers International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.